A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Home building ETFs are on the rise. We're going to find out why now with our ETF research director, Nina Mishra, who joins me here. So they're pretty strong now performance-wise, huh?
Yes, so real estate is actually one of the top performing sectors this year, mainly because of low interest rates and rather, stable nature of the sector. And home builders, which had a terrible year last year, have rebounded very strongly this year. Last year, their share prices had fallen because of concerns about a weak housing market and economic slowdown. Now this year the housing market has rebounded, and that is particularly of late, and that is thanks mainly to low mortgage rates. So many people are refinancing their houses, buying new houses, and that is also because unemployment rate is now at multi-decade low, and wages have been rising slowly even though, and housing inventory is also low. So because of all those reasons, many home builder stocks are near their 52-week highs recently.
Do you think that they're going to finish out the year strong?
I think so, because of all the concerns about global economic slowdown that will keep interest rates at a low level, and job market continues to be very, very strong. So I think housing can continue to do well going forward too.
And so far, no issues with bringing building materials into the country.
So far,
if they have to do that, like steel and lumber.
Yes, I mean the prices must have gone up a little bit because of tariffs and all that, but so far we haven't seen much impact on their bottom lines.
All right, let's take a look at a couple of these that you want us to look at. The iShares U.S. Home Construction ETF is one of them.
Yes, so these are the two most popular home building ETFs, and they are very different in terms of their exposure, even though they belong to the same sector. So I thought it would be good to take a look, and investors should understand what is inside these ETFs and what kind of exposure they want. Okay. And because of this difference in their exposure, there has been a difference in their performance too, which we will see. So this is the most popular home construction ETF. It mainly holds home construction companies, home builders. It's a market cap weighted ETF with an expense ratio of 42 basis points and 1.3 billion, very popular in assets. So let's take a look at this ETF by going to the quote page on Zacks.com. You can read our articles, our research report, and also go to the external homepage using the link on the quote page. Now, if you look at the portfolio, you will see all home builders there. The major home builders: D.R. Horton, Lennar, NVR, Pulte Group, then one materials company. And because of market cap weighting, you will see that these top holdings, they account for almost 35%. Top three holdings account for almost 35% of the portfolio. Home building companies, they account for 2/3 of the portfolio, 67%. Then there is some exposure to building products and home improvement retailers too.
All right, and then there's the SPDR S&P Home Builders ETF.
So the ticker is XHB, and it has a lot of exposure to other related products companies, to home improvement, home furnishing, heating, cooling, flooring, and all that. So this is more diversified, whereas ITB is a more like a pure play home construction ETF. Okay. And another difference is that this is equal weighted. So you will not see those top heavy holdings in the portfolio. Slightly cheaper with 35 basis points in expense ratio, and slightly less popular, though very decent liquidity there too, 669 million in assets. And if you go to the quote page and go to the external home page, from there you will see that a lot of related products companies are there in the portfolio. Now let's take a look at the sector sub-industry exposure first. So home building is not even one of the top sub-industries. Building product companies account for 35% of the portfolio, then home builders about 32%, and home improvement retailers 11%, home furnishing about 10%. So whereas ITB was dominated by those big home building companies, you do see some home builders in the top holdings, but you know the weighting is smaller because of equal weighting, not market cap weighting. Though it selects the companies by their market cap, but then after that in the portfolio they are almost equal weighted. And you see companies like Mohawk, which is a flooring company, Mesco, which is a home construction products company, and Lennox, which is heating
And
cooling, air conditioning products maker. Whirlpool is one of the top holdings. And you see Home Depot, also the home improvement retailer, among the top holdings. Now, because of this difference in exposure, as I mentioned, there is difference in performance too.
Yes, there has to be, I would guess, right?
Yes. So because home builders have done very well this year, better than other companies, other related product companies, so ITB is up more than 42% year to date. XHB is up about 32%, whereas the broader S&P index is up just about 17% year to date now. And I would just mention that this difference in exposure doesn't necessarily mean better performance by ITB. It will perform better only when home building companies are doing better. So last year when home builders had a terrible performance, XHB had done better than ITB. So it depends on what exactly you want in your portfolio.
Sure.
For example, if you already hold companies like Home Depot and Whirlpool in your portfolio, maybe go to ITB for a purer exposure, or otherwise you can look for a more diversified and equal weighted exposure. You can look at XHB.
Okay. Do you own either one?
I do not.
All right, thank you for that. Don't forget, there is ETF information in two places on our website, Zacks.com. Articles, commentary that are written can be found in the ETF section. Use the Funds tab in the top toolbar to get to those. And then Nina produces a weekly ETF Spotlight podcast where she tackles other issues that we don't have time to talk about here in these videos, but that you will find interesting, and that you can find in the podcast section of our site. All you need to do is go down to the very bottom of the homepage, click on the word podcast, and it'll take you right to that section. With Nina, I'm Terry Ruffalo.